During a period, a high interest rate environment, they're not very appealing because how yield maintenance works is say, Hey everybody, Michael here from Adventurous Real Estate Investors. Today, I'm coming to you all the way from Edinburgh, Scotland, and I'm actually standing in front of the Edinburgh Castle, as you can see here. In an earlier video this week in our channel, you could see Suzy did a video from the other side of the castle, which is pretty good, so go check that video out for sure. But in this video, I'm going to talk to you about 3 different prepayment penalty structures that you'll most likely see as a syndicator or as an investor in multifamily properties. So one is a step down prepayment penalty, second is yield maintenance, and the third is defeasance. I won't get too wrapped around defeasance, and I'll just briefly explain it at the end, but let's get into the first one. The first one is a step down prepayment penalty. And what this means is typically structured in this way. So you have a 5-year fixed rate debt, and then you have a step down of 5, 4, 3, 2, 1. And what that means is that in year 1, if you wanted to prepay your loan, you'd have to pay 5% of the loan balance, right? Year 1 says 5, 4, 3. So in year 3, then it would be 3%, right? You can also see various different structures. That's just one structure. You can see 3, 2, 1 or various different iterations of that. 5, 5, 4, 4, 3, 2, 1 based on a 7-year loan or something like that. Or you can oftentimes pay extra or a higher interest rate in order to get some of that taken, where you can accelerate the prepayment where it's like 3, 1, 0 or some other structure similar to that. You likely find the step down prepayment penalty on loans that are Freddie Mac small balance loans or even local banks. Local banks often use these types of loans, right? It's great if you know that your business plan is a certain number of years. If it's 3 years, is it 5 years, right? A step down prepayment penalty will help you project what you would have to pay when you exit the loan at the time of sale or refinance. The second one is yield maintenance. So this one's a little bit more complicated, and during a high interest rate environment, they're not very appealing because how yield maintenance works is say you get a loan right now, a high interest rate environment right now. This is currently March 2023. So typically you can see something about 7 or 8%, right? Let's say you got a loan for 8%, and then in a year from now, that loan goes down to 6%. Well, now the bank is losing out on that 2%, right? If you end up selling or refinancing or something like that, right? And so what yield maintenance does, so say you got a 5-year loan, you say you got it now at 8%, and in a year from now, the interest rate environment goes down to 6 or 5%, right? So the spread between the 8% and then the lower interest rate, so say 6%, a 2% spread, you have to calculate out how much the bank will be losing if they were to maintain the current loan that you have with them through the lifetime of the deal, right? And so that would be your yield maintenance payment. So it can be a pretty hefty payment, right? So in a low interest rate environment, so say, 2020, 2021, right, when interest rates were down in the 3s, right, and now they're up in the 8s, if you wanted to exit that yield maintenance, they would allow you to exit because they can go and lend that money out at a higher interest rate and make more money on that money. The third and final prepayment penalty I'm going to talk to you about is defeasance. I'm not going to get into this too much, but because defeasance you'll see in CMBS loans or commercial mortgage-backed security loans, and basically what happens in this case, a very high level here, I'm not going to get into all the details, a very high level is you have to carry that loan to term. They will replace the asset, the property. So say you have a 100-unit multifamily property that is used for this lending structure. You have to replace that property with another asset or property basically in order to carry that loan to term. So again, I won't get into all the details of defeasance because it's commonly not seen in a majority of syndicators. We have operators who are in the multifamily space. But anyways, to wrap everything up, the 3 prepayment penalties I talked to you about were step down prepayment. The second one was yield maintenance, and the last one was defeasance. So if you have any questions, please feel free to reach out to us and drop a comment below if you're interested in learning more about prepayment penalties. And I hope this video sheds a little bit more light on how prepayment penalties are structured on commercial properties. And if you enjoyed this video, smash that like button below and don't forget to subscribe so you'll be notified of all the next videos we release. Until next time, explore more, adventure awaits.